Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Tuesday, the 5th of March, 2024. Time right now getting on at 5:50 p.m. Central Time. So as you know, it's Super Tuesday, but we also have a lot of information tomorrow. If you take a look, you're going to get the Mortgage Bankers Association numbers. Then we get the ADP private sector jobs. That's going to be important. Fed Chair Powell, he starts talking at 9 o'clock. I'm sure it'll be televised. And he'll be in front of the House of Representatives Financial Services Committee, and then the day after in front of the Senate Banking. You have the U.S. January wholesale inventories data coming up. Then we're going to get the JOLTS report at 9. 9 o'clock is going to be one of these times that you get an awful lot coming out in the market. The Federal Reserve will issue their beige book, and that'll come out at 1 o'clock. And then we're also going to get the EIA petroleum stockpiles at 9:30. So it's busy. So is this been an easy market? Well, number one, it's difficult because you have so many different crosswinds. If the jobs data comes out weak, a lot of people think that the Fed will want to get ahead of the curve, if you will, and they'll be doing serious talking about when they're going to start cutting the rates. Right now, there's no need. If you've been listening to the different Fed members, you hear one thing: we can stay higher for longer. We have the luxury right now. We're not seeing the downturn yet in the labor. So labor is a big number. Inflation has fallen, it gets a bump or two, but labor has been the problem, and this is the week of labor. Obviously, we will see which candidates come out for the election, but it's widely expected that Nikki Haley will be dropping out of the race. Michelle Obama tonight made it very clear she has no intent of stepping into the Democratic race for the presidency at this point. So I think it's going to be Biden-Trump. Now, we're looking at the markets. You can see the gold market slipping a little tonight, silver slipping back. In copper, what you get out of China here isn't what the market wants. China says they're going to grow 5%. They're going to spend X amount on defense. They're going to cap their expenses at X percent of their GDP. How are they going to grow the economy is the question that all of us are asking, and we're not getting any of that detail. Normally, they'll hit you with a bazooka or something. Not happening right now. And that's been weighing a bit on the energy prices because they're such a big buyer of the energy. When we take a look at the gold market, the continuation of the rally goes on. For the week, we've added approximately $40, almost 2% in price. The market has had certainly the series of moves to the upside that began late last week, continued on. Look at that spike. You can see it until you take out the low right over here near the 2000 level. The bulls will say a low is in place and this market can go on to make higher highs. We have counts at Linn that could carry the market over time to the 2180 level for what we call a third price count. If you haven't seen our price counts, you want to go to iraepstein.com. Take a look at our free offers. These are information that our trading clients can get through us, so I think you'll find it interesting. If you take a look here, you can see how the 18-day average skirted, kissed the 100-day, took off, and the market is trying to get back underneath the upper Bollinger Band. Only 5% of the time do you stay over the band. In futures, it's rare to get beyond 5 days in a row of settlements over the band. It can happen, but it's rare. It's certainly not bearish. And, I get so many people that'll be wise guys. Oh, you said you're bearish. The market's over the band. That's not what I'm saying. I'm saying the pros take money off against the band, and the more stretched out it gets, they cut the positions down. Then they look to see, are you getting an embedded reading? That's what I think. They look to see is momentum locking in, and if it is on the pullbacks, buying programs can kick in. So that is what I'd be looking for. Do you get the embedded reading? You can see that the market is playing against the 18-day average of closes on the ratio of gold silver at this point. I will drop the March silver soon, but not yet. It's just a ratio, and it makes sense to keep it on at this point. In the May silver, which is where I think the people are trading at this point, you still have higher lows, higher highs, and here you are pulling back into the bands. Last night I told you, you, generally speaking, I can only use the word generally because there is no such thing as always. Generally speaking, the first challenge when you haven't seen a major moving average like a 200-day, often it's also a 100, and you did it plenty of times where the market failed against the green line. But when you get up to the second one, it can act as a retardant to the prices going higher. In other words, it's going to pull back on them. Prices could fall back. What was resistance, the 100-day, could become support, and the bigger support's the 18-day average. But the fact that the market's just pulling back into the Bollinger Bands is a sign that, number one, it is still bullish, it is overbought, but it has power still to the upside. The copper market is just drifting here. It's not getting what it wants out of China, but it's also not getting bad information. Now, we're going to see tomorrow beige book areas. That will definitely impact how copper looks. What are they seeing in industry across the different Fed districts? That's going to be very important. JOLTS data, ADP data, then Friday, the U.S. jobs report. And of course, we're going to be listening to Fed Chair Powell at 9 in the morning. You don't think that'll all be impacted? You'd be very wrong in thinking that. When you take a look at the platinum, the market is still fighting a battle at the 18-day average down to the lower Bollinger Band. Just can't get itself going one way or the other. And a market that is still caught. Can you believe it's still all this time? Take a look at the 100-day average to the 18. Look at how often you just keep whipping back and forth in there. So if you think this has been easy trading, you are wrong. There gets to be at times difficult times in the market to make trades. This has been one of them. You look for all these reports to straighten things out and then for it to get easier. I have told my clients recently, in my subscriber video, trade smaller. That is the key word right here. And the reason is, if wrong, be wrong for minimal amounts. Don't bet on a home run after this type of big trade. Maybe it continues higher, for example, in stock indices, in the gold, but being overbought is a hard place to come in. I talk about this all and show the charts of the daily, the weekly, and give you ideas every single morning in the morning subscriber video. You'll get entry points, exit points, what the news of the day is, what to be looking for. And I'm doing this all at 5 in the morning, so I've had the ability to already see what's going on in Asia and Europe, and I bring that to you. So again, I record about 5 in the morning, about 5:40. The video is already, that's after I render it and get it all ready for you. And I hope that's how you want to start your trading day. So if you'd like to see this, it's pretty simple and easy to do. You go to iraepstein.com, go to the word research when you're up there, or move your cursor to the very top. You'll see an icon. Give it a click. It'll take you right to that area. I'm Ira. You have yourself a good evening. I'll see you tomorrow.